Hey all, welcome to ShareTreck. This is Raj here. Friends, we have started covering AI over and above genomics. I've already done a few videos on AI that you can have a look in our channel. Today, my objective is to compare ARM holdings, NVDA and AMD and find out how they are relatively priced. Three of them are in the same industry and the same metrics should work. So I've done a comparative analysis of all the three to find out which one is the best. Of course, everything I state here is my personal opinion. I may make mistakes. I'm a retail investor. I'm not a professional analyst. So I'm sharing it in good faith, and I'm hoping that if you find anything wrong in it, please put it in the comments so that I can check it out. And please do your own due diligence. Talk to your financial advisor or the one who guides you before you make any investment decisions. Semiconductors and AI is a frothy environment right now. Valuations are stretched and we need to get a better understanding and a grip. So all investment is fraught with risk. So please keep that in mind. And with that said, let's get started. Welcome back, friends. I'm going to present to you my analysis of AMD, ARM holdings, and NVDA. That said, let me take you to my spreadsheet. Well, this is my spreadsheet out here, and you can see that I have color coded it so that it's more legible. I have some things written in red. I'm going to talk about them towards the end. Anything that is in red is a huge risk for this analysis because those are the areas where there can be uncertainty. There would be assumptions out there which may be wrong, which can throw off all the analysis that we have done here. So that said, I have three companies out here that I'm comparing, which is ARM, AMD, and NVDA. So what I have taken is price to sales for all these companies. From the basic data, the computation is that ARM has a price to sale of 52.12, NVIDIA has 12.3, sorry, AMD has 12.32, and NVIDIA has 40.11. Let me just make this center aligned so that I don't make mistakes. Oh, left align is better. Yeah. Next, price to book. I think NVIDIA has the highest price to book out here and AMD has the lowest. And in terms of PE ratio, you can see that NVIDIA is still inexpensive. It's at 95.59 when compared to the other two members in the same industry. If you had to compare this with the general stocks, I think all these three would be very, very highly valued. But you can see here how high AMD is in terms of the price to equity ratio, P by E ratio. Next, if you look at our profit margin, you have got, before I go to the profit margin. So price to equity out here, you can see that AMD is quite high. Now there is another ratio that people look at, which is called as PEG ratio. Let me reduce the intensity of this one. So we have a PEG ratio here. For both AMD and NVIDIA, I got the basic information available so that I could calculate the PEG ratio. But for ARM, I had the PEG ratio and the PE ratio, so I calculated the growth forecast, which comes to 47.84. And for NVIDIA, the growth forecast is 452.68. And for AMD, the growth forecast is 34.4. So if you look at PEG ratio, AMD has a very high ratio of 9.54, followed by ARM with 2.63, whereas NVIDIA has only 0.211. So if you look at it from that perspective also, NVIDIA is inexpensive. And that's the reason why, despite the market going down, NVIDIA is still strong today. It has the lowest drop and it had been periodically green today as well. So that's the reason why I think NVIDIA is a superior offering. Again, this is my personal opinion, not financial advice. That said, the biggest risk out here is that we have the growth rates, which is not coming from me, but it's coming from analysts who are expecting this kind of a growth. So needless to say, when the earnings come out, if the growth rate does not match, then the shares are likely to fall down in order to adjust to the new growth rate, and the future growth rate will be adjusted downwards, and therefore the projections will go downwards. So that is the big risk for NVIDIA because the price is high. But if you compare to the rest of the two in the industry, you will find that NVIDIA is still very inexpensive. If I look at profitability rates, I think NVIDIA has the highest profitability. And if you recollect our friend Sandeep, when he was doing analysis of NVIDIA, he was talking about profitability like $1,000 for manufacturing and $10,000 is the sales price. So there's a profit of 9,000, gross profit of 9,000. So that is amazing. So we are looking at a very high profitability rate for NVIDIA. Now, if you compare that with AMD and ARM, ARM is much better than AMD. However, I must caution everyone that if NVIDIA has got such a high profitability rate, that means they are not building a moat around themselves, because any company that has got a big advantage would like to build a moat around itself, especially when it's a capital intensive industry, so that newcomers are not able to charge the kind of price they would need to charge in order to break even, and thereby prevent other people from coming into the business. NVIDIA is not building a moat, therefore there is its open season for others to try and catch up with NVIDIA. So that's what I would like to say when I see really high profit margins. So keep that in mind. This may be attractive, at the same time it makes NVIDIA vulnerable in my opinion. Operating margin 57.49 is good, and return on assets is very high for NVIDIA. Again, in all parameters NVIDIA is shining. Return on equity also quite high. And when we look at the debt to equity ratio, I think AMD is looking good, and NVIDIA is also looking good. Talking about debt to equity ratio, I think AMD is looking superior. They're marginally superior than NVIDIA. But if you look at ARM, I mean, it's got a lot of debts. So that's a big factor out here. But if, as they claim, they can command higher prices and they're expanding their market and they're going to get more revenue, and they prioritize to bring the debt to equity ratio below 1 or around 0.5, I think they should be doing much better. So we can look forward to improvement in ARM. And then we have the quick ratio. A quick ratio of 1 or higher is considered to be good. So basically the quick ratio is current assets minus inventory and the whole thing divided by current liabilities. So that's how it is calculated. A quick ratio of 1 or higher is generally considered good, indicating that the company has enough liquid assets to cover its short-term liabilities. However, like any other financial metric, the ideal quick ratio can vary by industry. Right now we are looking at industry peers. So if we do a relative comparison, I think NVIDIA is in a superior position, followed by AMD. So that's the difference. Earnings and growth. This is another parameter that I have taken out here, but I kind of substitute the whole thing with the PEG ratio calculation, so I won't go into all these numbers out here. But if you look at earnings per share, I think NVIDIA is doing way better than the other companies, which means there are less shares of NVIDIA as considered to the earnings. And that's another reason why NVIDIA stock price is looking so high. They are ripe for splits, in my opinion. They may come up with a 1:10 split or something like that, in order to make the share more accessible to the market and to improve the volumes, because with higher volumes comes a good deal of stability in the price. So that is something I think I'll look forward to when it comes to NVIDIA. And if you look at revenue per share, you're looking at a higher revenue per share with NVIDIA, thanks to it having lesser shares. And the next best is AMD, and ARM is not that great. So when you compare all these factors, you can quickly see that ARM has a whole lot of hype right now, but they have to prove themselves in the next earnings quarter, and then they will be golden. Till then, at this point of time, I think they are overvalued compared to AMD and NVIDIA. And if you look at return on assets, NVIDIA is giving a greater return on asset as well as return on equity. So in both cases, I think NVIDIA looks way better. Next, talking about book value per share, because there is lesser number of equity in NVIDIA, it has got a lower book value per share. And that's why you see it at 13.49, whereas AMD is at 34.59. So in conclusion, what I have here is that in terms of valuation, it seems like AMD's ARM is potentially overvalued based on high P by E and PEG ratios. Whereas if you look at NVDA, NVIDIA has got moderate P by E and exceptionally low PEG, which suggests potential undervaluation. And AMD comes next, like AMD. So in terms of valuation pecking order, I'll say NVIDIA, AMD, and then ARM. So NVIDIA is the best, next best is AMD, and then you have ARM. And when you look at profitability, NVIDIA wins hands down. And as far as AMD is concerned, it's better than ARM, but it's way below NVIDIA. And in terms of financial health, I think NVIDIA is the strongest of them all. And in terms of earnings and growth, highest revenue size and growth for NVIDIA, and also highest expectation. Look at this red number out here, forecast growth for NVIDIA, it's 452.68. So it's very high. And I have taken data from Yahoo and other sources. So as a result of which, what could happen is that if there was any error out there, or they were for some mismatched time periods, I know for sure that NVIDIA has a different quarter ending. So I think there could be a little bit of mismatch here or there, but this suffices for a high level understanding given the market condition. And all of you can do your own analysis on top of this. If any of you find anything wrong out here, please put it in the comments. I think this is a comprehensive enough job for a retail investor that we are like what we are. And looking at the entire model that I have created out here, I'm satisfied that NVIDIA is the superior offering, way superior to AMD and ARM. And I think ARM has got a lot of hype right now, but it has to prove itself. It is the most overvalued at this point of time. AMD is also overvalued, but not as much as ARM in my opinion. And the risk factor out here is that the growth projections that we have taken to calculate the PEG might be wrong because this has been done by industry experts. And also, as I said, I have taken data from Yahoo Finance and other sources. So there could be a quarter mismatch or updation mismatch and so on. So the analysis is as good as the source data. And as a retail investor, I don't have any paid professional data sources. So this is the best I can do. So friends, the conclusion is that NVIDIA looks really good. And as I said in my disclosure, I have 5 NVIDIA on the US side, plenty on the Canadian dollar side, Canadian depository receipt side. I've got around 200 AMD on the Canadian side. And I also have, I have got 200 NVIDIA on the Canadian side. And I would have another 200 AMD on the Canadian side. And I have 5 AMD on the US side and around 40 ARM on the US side. So that's my exposure to these stocks. I hope you liked this analysis, and please let me know what you think. Would you like to have more of these kind of analysis? Because as we go into the AI area, it's going to be very different from what we had in genomics, because in genomics, none of our companies are making revenues. But in AI area, all the companies in our watch list are making revenue and are profitable. So we are going to look at other things like P by E and PEG ratio and so on. So please let me know in the comments if you find this of value, and I'll incorporate more of these. That said, I'd like to bring this video to an end. Thanks and have a great day. Bye for now.